G'day guys, welcome back to another Bitcoin video. Today we have an ascending channel formation on Bitcoin that resembles a bear flag pretty well. It's not fully valid yet, and the reason why it's not fully valid isn't because it's not valid on the Binance chart, it's because it's not valid across all charts. But we do need to look into that because I do suspect that that structure will become valid very shortly, and I do ultimately suspect that is the structure we are in right now, regardless of whether it's fully confirmed on all of the price charts. We've seen very low volatility. That's something that we've been experiencing for basically the past month, even more than that. Partially that's due to the fact that it's Christmas time. Not many people are on the markets right now. People are on holiday, etc., spending time with family. But also partially it's due to the fact that we're seeing just regular bear market vibes. This is what happens during a bear market. And generally speaking, and this is something we'll look at in this video, this is what happens when we're near the bottom, right? We see volatility really start to die down near the lows. We've got data to represent that in this video. We'll show you in a second. And one more thing I'm going to be talking about in this video is the fact that a recession in 2023, a downwards price action on the stock market is likely, and I do submit that it is likely, of course, but it's not guaranteed. And we do need to look into some data and some analysis regarding that as well. Just briefly, check out the description, check out the pinned comment. VIP sale, we've got 4 more days of that, 30% off VIP memberships, 4 days to take advantage of it. Crypto Academy courses if you want to learn how to trade, and of course, the free Telegram community discussion group. Let's go. So I'm going to be keeping this video nice and short because I don't want to take too much time expanding on the price action right now because obviously we haven't really done much, but I do want to quickly note that I haven't pointed this out before because I didn't see it as entirely valid, and rightfully so. I'll show you why in a second. The current price action we're seeing is actually a bear flag formation. That is a structure in which we see an ascending channel after a strong downwards move like we saw during the FTX crash. Now, a bear flag formation breaks the downside roughly 72% of the time, according to data taken from non-biased sources that we used during the Crypto Academy, making the course the Crypto Academy. So this is a bearish formation. Now, combine this with the fact that we're seeing decreasing volume in this upwards trend. It's not very good. An ascending channel formation, of course, it's an upwards trend. It's where you're seeing higher highs and lower lows. We have, of course, been seeing higher highs and lower lows as per the structure itself. At the same time, we've seen descending volume. That represents that as the price climbs higher, less and less people are willing to buy, which means less and less people see the fair value of Bitcoin as higher rather than they do as lower, right? At this point in time, there's not much bullish strength. And generally speaking, that does support the argument that there's going to be a breakdown. Now, based on that, we opinion isn't really as big as people make a deal of it is, right? But let me explain this for a second. You can have an opinion on the market, but when you see a bearish market pattern, there's only so much opinion that you can have, right? You have to take it for what it is. You have to take it for the data. The data says that is likely to break to the downside. Therefore, we have to kind of assume it's going to break to a downside. Now, that doesn't mean you have to put a short position in right now because that's ridiculous, right? You wait for a confirmation of the break to the downside and then you make the move. Predictions are only relevant when we've seen confirmation. Without confirmation, predictions mean nothing. And that's why I don't make predictions very often. I'm very cautious about what predictions I make. I like to observe, and then when things actually are confirmed, that's when I make predictions, that's when I make action. But right now, it's not a stretch to say by any means, and by any word, way you could say, it's not a stretch to say that Bitcoin is in a pretty rough position. That's just factually correct. It is. It's getting rejected from a 21 EMA as well. You can see the last few candles have been strongly rejected off of that. Volume's going down, of course, and we've got major resistance up above. In fact, probably some of the most major resistance Bitcoin has ever seen. At least in the recent couple of years. We've got bull market support band lining up with that downtrending yellow line. We've also got the 300-week SMA that we can check out on this chart here. That's in the same region at 18.3K, which lines up to about over here, right, 18.3K, so that's very strong as well. And then on top of that, we can bring up something like the 200-day moving average, which of course is what rejected us back here in, let me check, back here in around, reject us here back in around March. That is obviously in the same region as the bull market support band and the yellow downtrending line. So the point is very strong resistance above and not looking particularly good in terms of bullish strength at the moment does represent the fact that we're probably going to be seeing downside price action. Again, not confirmed. When it is confirmed, that's when you take action. There could obviously be something that dramatic that changes, something could happen, etc., and that could lead to a reversal. And ultimately, we've discussed this in the past, but I'll discuss it one more time briefly just for the sake of this video. I am expecting a directional decision on Bitcoin before the January the 9th. And the reason I'm expecting that is because we see the RSI on the weekly chart forming this triangle formation. That formation is coming to an apex around the 9th of January, meaning we'll be seeing a breakout to the upside of a downside on the RSI on the 9th of January, which generally means you see a break to the downside of this downtrending, of this uptrending yellow line that lasts 8 years, right, stemming all the way back here from 2014, or we'll see a break above bull market support band and this yellow line here, and that would lead to upside moves. So again, just clarifying, if you didn't catch that, the main point of what I'm saying is we're going to be seeing a directional decision very shortly, within the next 2 weeks, most likely, even less time than that potentially. And so, that there's only so much predictions you can do in the short term when there's very low volatility on Bitcoin. And there's so many conflicting charts right now. It's another thing I'll say. It just makes it very, very difficult to give you a clear, concise prediction. Because you look at something like volatility on Bitcoin, volatility is reaching lows that it hasn't seen since 2020. And the only other times we reach these lows really is during bear market bottoms in 2015 and also in 2018 we reached these lows. We haven't seen that since those two price regions, right? So that low volatility does potentially represent the fact that we might be seeing a bottom here. We also bring up something like the Bitcoin long-term power law, which is a macro chart, an on-chain data chart that kind of has these rapidly converging, I suppose slowly converging lines on the logarithmic scale. And you can see we're at the low here and we've never broken below that before. And that's something we've seen tested in the last 3 bottoms as well, during COVID, during 2018 and during 2014. So, you can look at this chart of a daily chart and say, oh, it's a bear flag, we're seeing descending volume, we're going to break down, we're going to make new lows, all you want. But at the end of the day, there's so many things that go into it that it's just better at this point in time just to wait. Just wait and see what happens. January 9th is not long away. And ultimately, something I want to discuss as well really is this chart here, total cryptocurrency market cap chart. It's still holding support as well. So there's so many bearish arguments you can make in regards to the macro, in regards to S&P 500 dragging Bitcoin down. There's so many bullish arguments you can make in regards to the 4-year cycle coming to an end, and we're seeing a bottom here because of the 4-year cycle, and also everything's on support right now and all this. Again, it's just very, very hard to say at this point in time. But what I will say is this. I think that, everyone is taking it as basically a certainty that the S&P 500 will go down. I don't think it's as certain as people think. I think it is likely. I'd say it's probably an 80% chance, to be honest with you, very, very likely. And the simple reason why I think the S&P 500 will go down is because we've never seen the S&P 500 bottom out while interest rates are rising. We just simply haven't seen it. And interest rates are still rising, and they're going to be rising for at least, I don't know, I think until June or July. I think that's what the market's expecting. So, to act like this time will be an anomaly is quite ridiculous. Now, look, that doesn't mean it can't happen, but generally speaking, you invest with the trend until it ends. And the trend is at this point in time that interest rates are rising, therefore the market will go down. The stock market will go down. But I do want to point out the fact that there are arguments against this. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the rewards center. It's got everything you need for a trader using an exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below. And without further ado, let's get back into the video. Right, one of the arguments was posted in the New York Post recently by someone named Ken Fisher, who's I think he's a hedge fund manager in the USA. Essentially, he made a bunch of points here. I'm not going to go through the whole article, because I don't think it's necessarily important. But he made a bunch of points in this article as to why 2023 will be like 1967. Essentially, the points he make come back to the fact that we're in a kind of similar situation to what we were in 1967. And that is that you can see the fractal there, not only in price action, and the fractal there is quite clearly quite similar, but also in terms of the economy in general. We were seeing massive expectations for a confirmed recession in 1967, and ultimately it didn't happen. And a few reasons went into that, one of which being election cycles. That's a big deal about it. Another of which being loan growth. There's a few reasons he points out here, all of which are pretty valid reasons. Now, again, I'd still say that the argument that the S&P 500 will go down is stronger, but the point is there are other cases there. People in the markets and financial markets rarely like to hunt for certainties, especially inexperienced traders and inexperienced investors. The fact of the matter is nothing is certain, guys. Nothing is certain to happen. The S&P doesn't have to go down further. It probably will. Based on historical data, it probably will. It is likely that it will go down further, but it's not certain. There's a solid chance that it doesn't. Same thing with Bitcoin. You can sit here all day and say Bitcoin's going to 3K. The fact of the matter is it could very well be bottomed out at 15.4K. Even though it doesn't look likely, guess what? In hindsight, things happen. In hindsight, if you look back on things, right? For example, when you're experiencing something, it looks very, very bad. You might look back on it, maybe it wasn't that bad, right? That could be a situation we're seeing here. And I do think there is a case to be made for that. And I have said over and over and over again over the last month and a half, ever since the FTX crash, I've said over and over and over again, I think there is a decent chance that the bottom is in fact in on Bitcoin. Again, nothing is confirmed, and nothing will be confirmed until we break out, right? If we break out of this yellow line, we break bull market support band, we break 200-day SMA, that's when you see the confirmation. Until then, it's speculation, and speculation can shift as the data changes, of course. So I know it's been a lot of rambling in this video and a lot of inconclusiveness, and I know that it annoys people, but the fact of the matter is people need to understand that inconclusiveness is where we're at right now. We don't have the data available to be conclusive, unfortunately. There's simply too many questions in the air. Will the 4-year cycle hold? That is the biggest question Bitcoin is facing right now. Bitcoin is expected to bottom out in Q4 or January according to the 4-year cycle. We're entering January now. We're in the last 30 days. If that breaks, that's bad, right? That's 12 years of data down the drain, 11 years of data down the drain. That's really bad. That's where we're at. We're not at a point in time which we can say, oh, the bottom's in, or the bottom's not in, we're going down. We're not at that point. We need to wait and see for this validation. I know it's annoying, I know it's frustrating, I know people are bored, but that's simply what it is. And that's the way I do things. Even in my trading, you have to wait for confirmation. You can't just jump in speculatively. That's how you get wrecked. That's how you get destroyed. So thanks for watching. Again, I know it's been a frustrating video. It's a frustrating time, guys. Thanks for watching. Hope you had a good Christmas, Happy New Year, whatever it may be. New Year's in a few days. So yeah, I just said that there. Happy holidays. And yeah, take it easy, guys. Thank you.